name is Alicia Seiger, and I'm the Managing Director of the Sustainable Finance Initiative at Stanford University. And we're here today to announce the best paper for potential impact on sustainable finance practices.
Hi, I'm Elizabeth Harnett. I'm a researcher at the University of Oxford Sustainable Finance Programme. I'm delighted to be here with Alicia this evening. We had some great papers for this potential impact prize, and I want to congratulate everyone who's participated in the conference so far. All the papers have been really interesting and all can have huge impact. So thank you for your research and your contributions to this conference so far, and good luck to everyone presenting tomorrow. I'm going to start off this Zoom prize giving by just giving an honourable mention to the second place paper, which was in a life cycle assessment of renewable energy projects financed through green bonds. And this was by Iona Popescu and her co-authors. We thought that this was a really exciting new take on the green bonds market and all the controversy that's gone around the consistency of green bond standards. Taking this life cycle assessment, we think, would be a potentially very impactful way forward for the market to take into account the whole project impact, rather than just focusing on use of proceeds, for example. But we felt that with all the methodological and data challenges that remain, although this has huge potential impact, we thought that the paper that has won the Best Paper Prize has potential impact in the shorter term. So I'll pass over to Alicia to reveal the winner of the main prize.
Great, thanks, Lizzie. I'm excited to present the winner of this prize because in my mind, it's the one that matters most. After all, we can't build the field of sustainable finance for just an academic audience. The goal of our research should be to ask the most critical questions and deliver research and analysis that will influence decision-making in practice. So as Lizzie said, we enjoyed reading all the finalists for this prize, and all of them filled in component parts of a larger story, but one paper stood out for its delivery of a framework that encompassed the full spectrum of sustainable finance. So while the proliferation of green and ESG products themselves may be fortified against systemic risks, universal owners, the largest pools of capital in the world, have exposure to the economy as a whole and must therefore work to mitigate systemic risks in the real world. So to better make the case for this framework, I'm pleased to announce this year's winner for the best paper for potential impact on sustainable finance practices, Ellen Quigley, and her paper, Universal Ownership in Practice. So let's welcome Ellen.
Thank you very much, Alicia. Thank you very much. I'm very grateful to have received this award, not least because I hope then that means this paper is at least somewhat useful to practitioners, which was very much the purpose of writing it. Just to maybe recap quickly, it goes through what you want to do if you want your portfolio to have a positive impact on reducing systemic risks like climate change and inequality, as opposed to avoiding climate risk to the returns of your portfolio, which is usually the focus of ESG. So it goes through a number of ways of doing that, but probably the most important one to mention is that you really do need to look at different asset classes very differently. So within public equity, there's little to no evidence of additionality in stock picking or applying negative or positive screens or best-in-class filters or whatever else. What's much more important is that you do a form of aggressive shareholder engagement, which includes more high-impact elements like voting against directors as opposed to advisory shareholder resolutions, although those surely have their place as well. And then really looking at those other asset classes where it really does matter what your screening mechanism is. Because if you look at, 90% of fossil fuel financing comes from debt, bank loans and bonds, then you really do need to be looking at your relationship with your bank and your bond portfolio if you want to have a high impact. And of course, venture capital and private equity are also very high impact asset classes. So I'd be really pleased to discuss the paper with anyone who's interested, and particularly with practitioners who find it at all useful. Again, really hoping that's the case. Thanks again. It's really lovely to receive this.
No, congratulations, Ellen. It was a really great paper. And I think it clearly demonstrates this in a compelling narrative, why the SRI and the ESG approaches haven't worked so far. And I think that that's very compelling in the current market. So, and I think that it's very important for these large asset owners to really get their heads around that. I work a lot with sovereign wealth funds, which are one of these examples of universal owners through the One Planet Sovereign Wealth Funds Initiative, which is actually partnered with GRASFI. And I'm looking forward to sharing the paper with them. I think that it gives a really clear explanation of the way forward, and you've done a great job of outlining how this approach is really practical across different types of investors, but also different asset classes. So I congratulate you again and look forward to sharing the paper as it's ready. So well done.
Thank you.
Bravo.